You and Gary were both named to CoinDesk's most influential list this year. Congratulations.
Thank you very much. So honored. And the incredible visual done by Ravi is inspiring. It was super cool and surreal to have such an honor. So thank you all for making that happen.
Awesome. So you say that corporate America still has a crypto appetite. What are clients telling you?
Yeah, so from where we're sitting, there's a lot of curiosity and interest coming from Fortune 500 companies. We see an influx of curiosity and wanting to learn more and wanting to understand, even in the wake of some challenging situations over the last couple of months. So I'm actually at the Ledger Open right now in Paris, and there are quite a few big publicly traded companies in attendance, curious to learn more and curious to wrap their heads around what they can do to ready themselves for the next generation of marketing, consumer engagement, financial freedom. So in spite of a few things kind of slowing down, especially from an immediate commercialization perspective, what we see at Vayner is a lot of companies are very curious, wanting to learn more, explore, experiment, and of course do so in a safe, secure way that kind of sets them up for this next iteration of the internet.
And I have two questions for you. The first one is that we are looking for a taco sponsor here on The Hash. And so maybe it's not a question, but I'm just putting it out there. If you know any taco sponsors that would like to come on board and do something with us, we are all ears.
I love that. We're manifesting Taco Bell. We're manifesting some type of big, delicious eatery. Chipotle, maybe.
We'll even take KFC. We'll take KFC. We love chicken sandwiches as well.
Okay,
yeah,
great. We just love food here.
All right. So here's my real question for you. Something I've pondered a lot when I think about brands, mainstream brands getting into Web3. We saw a lot of experimenting during the bull market, right? And it felt like a lot of brands were buying into the hype. I love the hype. I have some Bored Ape Yacht Club M&Ms on the shelf behind me. But when we think about long term here and past the hype, how are you talking to brands about incorporating NFTs, incorporating crypto into their always on marketing strategies? And what I mean by that are, campaigns that live all year, that live beyond the hype. Can you kind of give us some insight into that?
Yeah, absolutely. I think we will continue to see a lot of experimentation coming from big companies in 2023 and 2024 as they understand what Web3 can really do for them that improves the consumer experience. But the biggest thing that I think we'll see is sort of embedded as this always-on layer is a couple of things. First is loyalty. Loyalty programs have existed forever, since the days of punch cards and pen and paper, right? And of course, that's evolved a lot in Web 2, but we see loyalty as a major thing that's driving brand interest into this world. Whether you're talking about something like Starbucks Odyssey or what Reddit's doing with their collectible avatars to re-engage their existing communities, I think we'll see a lot of that from sort of an always-on perspective. And the second thing I think we'll continue to see develop is brands developing these almost like sub-companies as standalone businesses. In the world of fashion, we see this. Nike acquired Artifact. I anticipate that we'll see some more acquisitions where there are almost these Web3 native teams designing digital-first products and experiences that can operate as sort of a year-round thing. Porsche just announced they are going to be launching their first ever NFT collection, and they hired a bunch of people internally, a really great group there, looking to sort of build this out as an always-on strategy. And I think we'll continue to see a couple of big companies experimenting in that direction, really committing with an always-on team, always-on strategy, and the agility that you need to succeed in Web 1, 2, 3, 4, or 5, right? Like marketing's all about agility. Every business is all about change.
Hey, Avery, it's Zach here. I think you alluded to sort of ideas around loyalty and ways for NFTs to be a new vehicle for that. I mean, if you look at NFT volumes, right, like they're in the dumps right now, right? November 22, this past month, on Ethereum at least, saw like the lowest trading volume in terms of NFTs, like on record, right? So clearly we're sort of, if we go back to the Gartner hype cycle, right, we're clearly past, the moment of heightened expectations. We're definitely in the trough of disillusionment. In your view, what does sort of that plateau of productivity look like for NFTs, whether it's loyalty, utility, or something else that we haven't even discussed? What do you think these look like when they've, again, reached that plateau and are here for the long haul?
I think the amount of trading volume from a pure commercialization standpoint that we saw last year may not ever happen again. But the future of NFTs is not necessarily just in high value trading collectibles. That's one market, and that's a super specific market of people who are buying, selling, trading NFTs all the time. We had a massive bull run last year. But when you mention like NFT volumes are down, it depends what you're looking at. If you're looking at number of new unique wallets, if you're looking at number of new customers engaging, I think that's a different story. Polygon has probably been the poster child here of onboarding massive companies to their technology and doing so in a way that's really scalable. Whether you're talking about the DraftKings or the Reddits or, more recently Salesforce's announcements, these are going to be almost invisible layers that are not as hyper commercialized as what you saw in that chart. We're not going to. The future of mainstream NFTs is not in the thousands; it's in the $1 to $5 range, or free as a mechanism to engage consumers. So at Vayner, just last week we did several different activations during Miami's Art Basel Week, and the majority of those were actually free as a way for brands to engage their consumers, onboard new people in a way that's fun and friendly, and not so focused on speculative investing.
Avery, thanks for joining. I want to ask about the new show that you're doing with CoinDesk, Generation C. Looks like it's a pretty cool intro into how marketing and how people in the marketing world think about crypto and how we bring adoption to everyone else. And that's something Jen loves bringing up on the show all the time. So I want to get your insights into it. What does Gen Z speak to? Who's the audience? Who's going to listen to this? It looks like it's going to be a pretty big show. And I think Jen's going to listen to it. I have a good feeling about it.
I will.
Jen, give us a listen. Rate us 5 stars, please.
I will for sure.
So I think Generation C is designed for marketers and folks in the business world who are curious about all of this stuff that's happening. Maybe they're not into this themselves, but they understand the cultural relevance component of this sort of new Gen Z, Gen Alpha, who is growing up in a digital first world. They're growing up with digital currency being the norm. They're growing up with digital assets being the norm. So marketers are curious. I want to hear how companies are navigating this type of thing. So myself, along with Sam Ewan, are hosting Generation C on a weekly basis. I think we have 13 episodes. Today, we're going to have a very special guest, a co-founder of DraftKings, Matt Kalish, will be joining us. We've had the CMO of Vista. We've had a number of very exciting guests, and we've got a really amazing slate of marketers lined up. And what we're looking to do is unpack for marketers what's real in this world, what's working, and what are the opportunities to take forward as enterprises and big companies and big brands look to build their Web3 strategy. So Generation C is all about getting insights of this sort of new emerging audience and how brands are finding success and navigating challenges as they look to engage those folks from a marketing perspective.